I am back with another edition of the Sunday Scary Stock Talk podcast. But before we begin, I'd like to thank Financial Stock Data at financialstockdata.com. You can use promo code GCI, as in Green Candle Investments, to get your first month free. I use Financial Stock Data to analyze every single stock that I break down in my newsletter. And if you've been following me for a while, you know that I've been using it for quite a while. So it's great. They're doing a lot of new updates. They've recently rolled out some new things and new features that I'd like you guys all to check out. First off, you can check out their watch list, and you can set all kinds of alerts for any kind of stock or company that you're looking at. So if it drops below a certain price or if something happens in the market, you can get that alert sent to you right there. And there's also a radar chart and a screener to discover new stocks. And my special guest here today is actually the creator of Financial Stock Data, Steve. So I'm going to bring him up in a second, but be sure to check out financialstockdata.com and use promo code GCI to get that first month free. All right, now let's bring up Steve. Steve, how you doing today?
Hi, Brandon. Nice to meet you. Oh, nice to see you, I have to say. Very nice. Thanks for having me, first of all. Very nice introduction, of course, also. And thanks for having me. I'm looking forward to the podcast.
Yeah, for sure. So, Steve and I, we can get into a little bit of our story of how we've met and kind of linked up. But, if you've been following me for almost since the beginning, I think I've been using financial stock data. I think you guys found me maybe a couple months into me writing. So our connection's almost going a year back right now. So, tell me a little bit about the idea of financial stock data and kind of how you got the idea to work with, your co-founder Willem to develop this.
Yeah. So first of all, very happy that I meet you guys so early on already in the journey. But we get to that in a minute. So when I was studying in university, I studied information science in the bachelor, and you're basically like a bridge between a customer and a programmer in that course, in that study, how you call it. But I was kind of missing there was a lot of theory, and I was really missing the how to use certain tools and certain methods in real life. So that was the first thing. I wanted to create a tool to better understand such programmers. In the meanwhile, I met Willem through a mutual friend, and he actually studied econometrics. So it's really like the quantifying stuff, the quant guys, I must say. And we actually shared some knowledge about investing, because we also like to read. And maybe you can see my books a bit on the side here, but these are mainly investing books. And we started sharing some knowledge about investing, and then we were looking for the data to actually analyze companies. But as soon as we started looking, we saw many platforms, but very expensive with good data. So for example, think of the Bloomberg terminals, etc. But for students like us, it was actually not affordable to do that. And so we decided with my love for creating tools, etc., to create an investing tool ourselves. And we first started to do some random programming, etc., and we plotted some charts. And then Willem one day he told me, "But Steve, now every time you create something, you actually have to go to my PC, install it there, and then we are both on the same level again." So then I decided, now let's make a web application. And then that was actually the beginning of financialstockdata.com. So we actually both could go to the website, do our analysis ourselves, and then chat and discuss about it. So yeah, that was a bit the beginning of financialstockdata.com.
That's awesome. Yeah, so that's great stuff. I mean, good on you for creating it and kind of solving the problem that you saw. So, we I kind of alluded to it at the beginning, but we made our connection through Reddit. Actually, I think I was posting my newsletters on the value investing subreddit,
Mhm.
and so you guys were kind of hanging out on there as well. So what I guess what social media platforms or if any have you kind of found to both look at investing ideas and kind of spread out financial stock data and see if this tool is not only valuable for you and Willem, but valuable for people as well.
Yeah, so actually, what you said already, it's probably Reddit. I mean, there we so in the beginning, after we first launched, we were mainly looking for beta testers because what I learned is that it was very important to actually get this potential customer in the beginning of this process of developing such a tool, because it's a very iterative process of developing a tool or a web application or a software, whatever. Um, so and we were looking for like people interested in doing research about stocks, and then we actually came across you guys with your letter, with your newsletter, exactly. And after that, well, I mean, you see many bloggers, right, about finance, etc., and analyzing stocks or companies or crypto or whatever. But what I really liked in your newsletters there was that you always provided the bullish argument and a bearish argument, and from there on, actually let the reader decide which way you wanted to go. So that was that spiked my interest, because it's actually also where a mission for like the platform actually, what the platform actually is. Because yeah, we strive to provide this data to people so they can make a reasonable an objective investing decision. So yeah, that really spiked my interest there, and of course your writing skills were like really good. So therefore, yeah, I contacted you through Reddit, and then we had a call, and now we're sitting right here, right?
Yeah, exactly. A long journey for sure. So, let's bring it back to, I guess, your upbringing and everything else. So, for those who are listening to the audio, I am in, the United States, and Steve's over in Europe. So we're in a little bit different time zones, a little different lighting setting right now. But, Steve, so how did you, I guess, find investing and kind of start the journey into figuring out how to invest and taking a dive into that realm?
Well, so in the first place, I think it's also a bit part of actually the time what we're living in currently right now. You hear a lot on social media, and you see a lot of so-called investing gurus, I must say, and so that spikes your interest. Of course, you hear about making money, or you hear about making money with your own money, and yeah, and then you going to experiment with certain of things. So first of all, you go to a broker and you deposit around like $100 or so, or €100, and you start trading some random forex stuff, basically gambling. But yeah, so you do. I think we all have that period. Have had a period in the beginning. So that was the first time, and then I lost. I lost like I was trading on margin without my notice actually. So then you lose some money, and yeah, and then you start to think about, oh, is this really something for me? And what kind of strategies, investments, stuff is out there? Then so I tried like a bit of day trading in the beginning in the first place, but I found that it was actually it cost me a lot of time to actually keep track of all the charts, etc. And then it's in essence, I didn't understand how this could all like work in the long term. I'm not saying that day trading it does not work. But for me, it just didn't work. And then so I must go step back a bit, because I was playing also in university. I was playing a lot of poker, and it's a lot about doing like with probabilities, etc. And I was pretty decent at this at it. So I was basically looking for that kind of foundation that I had with poker, like with knowing the distribution of the cards, for example, and then basing your place on these probabilities. And yeah, then I came across like certain books, and I found that like value investing was I think the one that stick with to me the most, the most logical and rational approach for me in that case. So yeah, and now I do my then the I met Willem, and he had like the same kind of interest, and we talked about the many different strategies, and we came out with value investing. We read a lot of books together, and then tried to actually take some things of that book, take some things of this book, and put it together to actually get your own strategy. Because in the end, I mean, it is rational, but it's not necessarily objective, because like investing is a bit subjective, right? Everybody has his own assumptions, and we try to when we analyze companies, we try to actually assess them in the most conservative ways possible, so that we get the margin of safety.
Yeah, for sure. So that's great. So yeah, I guess it seems like you follow the Warren Buffett school of thought, and if you guys are following financial stock data on any social media or anything like that too, you can kind of see that the value investing principles hold through. But obviously, not to be like he mentioned earlier, I don't think anything is trying to sway you in one way or direction. It's just kind of presenting the information. So I guess recently, we've had a lot of volatility in the stock market, but I guess both when you and I kind of started investing, value has always kind of been, I guess, underperforming these big tech stocks and all these other growth stocks that have been rocket shooting to the moon and other things like that. How have you kind of avoided, I guess, maybe the term that's used around the internet now is YOLOing into like an AMC or a GameStop or anything like that? What has helped you kind of stay level headed and stay with those value investing principles?
Well, I mean, like when we look at certain stocks, I always kind of try to forget the past performance. You know what I mean? So when I'm looking at when I'm looking at an investment from a fundamental perspective, I'm not looking at, oh, this stock went up like 200-fold the last 10 years or so. I mean, of course, it is important. If it has a higher market cap, it will be harder to actually 200 exit again. But to stay focused on these value perspectives, this was actually like pretty simple. For example, if we take an example for the AMC or the GameStop stuff, we actually did like some DCF for it, like just with some conservative estimates, and I actually saw like, oh, I think this stock is at a price it should not be here right now, so that was actually the guys who actually outsmarted the Wall Street guys. I think they're still pretty smart. I mean, they made money in the end, right? So they did a good thing. But from my perspective, I think it's too speculative on that. So I'm actually like, if I think something is speculative, I actually, or I don't understand it, I won't invest in it. So that's I think the most the reason why of course I could have made money, but on the other end, I just kept on these value investing principles, and that makes me, I think, avoid also some some losses, I must say.
Yeah, I
Does
think.
it answer your question? Maybe it's
Yeah, no, it did. Sure. I think, like you said, people a lot of times, especially, younger investors and newer investors get caught into this missing out on, or maybe the FOMO, the fear of missing out on these big giant tech stocks or whatever. It's a Dogecoin or something along those
Mm-hmm.
lines, and seeing these giant run-ups, but they don't realize that these giant run-ups also have the potential of the giant downfalls as well, because the underlying business is not something that you really want to invest in, or it's something that's dying along those lines. And like, when it's like that too, you also see a lot of regulation come in, or somebody step in. So I know, at least in the United States, it was kind of a big deal that Robinhood and some other of these trading platforms shut off trading for some of these big stocks that ran it up.
Mm-hmm.
And so, in the end, I think the value investing principles will kind of last on. And I think even now, and we'll kind of get into that, it's going to be even more important. But we're seeing kind of, a little dip, and a lot of, interesting times in the stock market. Maybe some things can't be explained as easily. We're seeing massive amounts of inflation all over the globe. The Fed, the Federal Reserve in the United States, raising interest rates, kind of causing the stock markets to crash a bit, and then do some crazy wonky things where, maybe it's turning up, turning down. It's kind of hard to explain. So, kind of how are you viewing the current market conditions right now? Are you still buying in, or are you kind of waiting till things calm down? Yeah. So, how are you just approaching this yourself?
Yeah, so it's actually pretty funny, because I actually do the same thing as I did when the market were at this all-time highs. I mean, there are always, I mean, there you all, as a value investor, you look for bargains. It's very simple, but there are less bargains on the top of a bull market. So actually, like the S&P is, I think today around like 20% down from its all-time high or so, almost bear market territorium. So it's um, yeah, my strategy is actually still the same. I'm looking still for bargains. I think some tech stocks are still, from my perspective, and I say this with an underline, from my perspective, still in some cases too high. I don't have like a I cannot see in the future, so it's I can say I think they crash more, but I don't know. But I just try to assess it from the moment I'm actually, at the moment I'm actually analyzing my company. So I think, yeah, how do I think about the current market condition? I still invest in the same way. I'll expect to find some bargains earlier early on, or sooner than I did, like 3 or 4 months ago.
Gotcha. Well, yeah, that makes sense. I mean, just kind of stay, you have a strategy, and you just kind of stay with it, no matter what the market conditions are. And if you truly believe in that strategy, all else will kind of fall into line. So, yeah,
Mm-hmm.
that's great. So, along the lines of, we talked about value investing. Let's dive into Warren Buffett. Obviously, he's kind of, the king of value investing, so to speak. So, has he had an impact on the way you invest? Have you kind of looked to him, or things that he says, to kind of get a lot of ideas and nail down those value investing principles?
Well, Brandon, if I would say no, I was there. I would definitely lying. So no, I mean, yes, he definitely has an influence in the way of thinking, because but more of the way he said things, but also like his principles, and Charlie Munger, of course, also. I think they just are very smart guys in the first place, and they have a lot of experience in life, not only like investing, but also in life. So, but I think, yeah, I mean, that definitely influenced my strategy, of course. But I think it would just was the most logical to actually see, and this actually goes like more back to Warren Buffett, like more to Benjamin Graham. It means Benjamin Graham was his teacher, of course, and he was always saying like buy a business, and not a stock. Like you try to when you purchase a stock, try to look at from a perspective, from a business perspective, or like a business owner perspective. So actually, yeah, owning a stock is not a thing for me. It's like owning a business, you know. And that's why I like common stocks, because they are like actually productive assets. They produce something. They make money, or I mean, they a farm like makes wheat or whatever. So yeah, that was like that. I think it's a knob turned on in my head now, and I cannot put it I cannot turn it down, you know. So that's yeah, he definitely influenced the way of thinking.
Yeah, and I think a lot of people when they read up on Warren Buffett, a lot of the sayings that I hear from that are, they came to learn about his investing principles, but they also kind of stayed for his life advice and other things that he gives too. And I've also tried to read The Intelligent Investor by Ben Graham, and learn some of those principles as well. So how has I guess the principles that Warren Buffett has it kind of preaches and everything, have you kind of changed any of your personal habits just strictly because of the way you've started to invest?
Um, yeah, I think yes. It's like, you know, they're always speaking. Warren Buffett always said. I mean, always. He also said in the past before, like, you have to also have some luck uh, in life. You know, for example, getting a wife, or getting someone that you want to marry and stay together for your whole life, etc. Some things, or general health. But besides that, he always addresses also the point of time and patience. And for example, right now, like starting a business on pretty early age, I must say. For like in the guy in Europe, or in the Netherlands in my case. But yeah, so time is your friend. I mean, it's now my friend, but it soon will be my enemy, you know. So yeah, definitely make time for the things you want to achieve in life. That's definitely one thing I remember, and I think I'm fully aware of that yeah, right now. So I see a lot of friends partying, etc., and doing stuff, and I'm more like a bit in the back. I do party sometimes, of course, but you know, but I'm more aware of the time I have now.
Yeah, exactly. And I mean, I think you kind of get it, and a lot of people our age, maybe go out and do the partying every weekend, or spend too much money and don't live below their means. But I think
Mhm,
a lot when it comes down to it, a lot of investing principles kind of teach you to save, but instead of saving, invest the money to kind of help you long term. So
mhm,
I know for me personally, I kind of started looking into Warren Buffett as well initially to kind of figure out investing and everything as a whole. And it definitely changed my time horizon. I always think of the short term sacrifices, kind of like you're saying, maybe staying in, or doing a little bit of extra work in a morning, or something
mhm,
along those lines in order to see the long term benefit. And so, yeah, that's just something that's always stuck with me. And I think, yeah, I could kind of see that in you as well, which is awesome. Even though,
mhm.
we're both completely across the world,
Yeah,
and Warren Buffett's in Omaha, Nebraska. He's definitely influencing a lot of people globally. So, a lot of
yeah.
cool.
Yeah. Of course, great to hear that too. And and also see and think that you have the mindset too, Brandon. It's yeah, it's a nice way of thinking, a nice way of getting knowledge. And actually, when I first started reading these books, I actually didn't like to read at all, you know. But there was just something that just spiked my interest, and that wants to actually keep keep me improving in yeah, and just my knowledge become a learning machine, you know, like something like that. Yeah.
Yeah, for sure. So, yeah, I mean, it's a lot of great stuff, and a lot of learning, and like you said, a lot of books and other materials and stuff too. So what has been your favorite book, or your most influential book that you've read, that's kind of changed your path?
Well, it's actually um, a book that got me more like in the entrepreneurial mindset, I guess. It's not even like completely an investing book or kind of thing, but like all the people in my family, they are like what's the word in they are not an entrepreneurs, or they are not business owners. They are just employees. That's the word I was looking for. So yeah, first of all, of course, you have to change your mindset a bit, because that's like the biggest thing here. So actually, I got my first book was what I read when I got this shift. For example, yeah, from being an employee to like a business owner was actually Rich Dad Poor Dad by Robert Kiyosaki, I guess.
Yeah, Robert Kiyosaki. That's
Yeah,
actually one that changed my mindset as well. So
yeah.
it's interesting you say that, because with Rich Dad Poor Dad, I am a beginning real estate investor as well. So when you hear podcasts and other things like that, that's where you usually hear that book is
Mm-hmm,
in real estate investing, and that's kind of like the mecca of
mm-hmm.
or maybe they call it the Bible of real estate investing
Yeah,
and things like that. But you kind of took it a different way. So instead of
yeah.
investing in real estate, you invested in stocks and just kind of took it as financial freedom. So what
Mm-hmm.
kind of stuff in there, I guess, maybe what kind of reasoning did you kind of go maybe towards the stocks route opposed to maybe the real estate?
Actually, very good question, Brandon. But I think it's also a bit of the case because, like in the Rich Dad Poor Dad, they're really talking about like, look, this is how I actually spend my money in the end. I buy assets through a business, and I don't pay taxes up front, just like the employees do, etc. And I keep more money, and I can do etc. It keeps going, and that was what it was explaining. Like in first of this business perspective, I was like, oh, is this like only in America, or is this also in, for example, here in Europe? And for the real estate part, it was actually a bit different because I guess you guys have to like do a down payment, right? And here in the Netherlands, it's like I think it's a bit different in that case because um, you do actually have to, especially in this time, you need to have a lot more money actually to buy a house. But yeah, so I think that was also a bit the case why I moved a bit to stocks because they're more accessible. In for Also for the time, and I didn't have that much money to actually get into real estate yet. So first I had to work a bit to actually get that money. But stocks are more accessible, and I always was a bit intrigued by that. And yeah, and from the noise I heard around it, it was always a gamble, and was always a gamble. And then I started reading more books, and I thought, nah, maybe if these guys can do it for like 50 plus years and get these kind of results, um, that looks not so much like a gamble to me. Um, and that was actually the time I also got a bit into poker, because the more hands I playing poker, the in the long term, the more money I made, because it was just it was stocks and poker are still a complete different game, but it has that kind of is it the gamble or not, that approach. But it basically is just like a game of probabilities. And yeah, but yeah, so I moved from my interest. I still think real estate's very interesting for me, but later on in life, especially due to the cash flow, etc. I really like that aspect of it. But I think common stocks can provide also bigger returns in the beginning. Also in my part, I mean in my life now at the moment.
Yeah, I gotcha. Yeah, I do realize, like, it is very different buying homes in America compared to everywhere else. I mean, I know in America we're very blessed where we have an opportunity where we can buy a house for 3.5% down, where I don't think that's really an option in many other places. So
And
yeah.
the other thing too, where you actually can, for example, don't pay taxes if you switch the house or something, like if you buy a house and want to sell it, and you sell it within an amount of months or so, and you don't pay taxes of it. Like you can trade it, right, or something like that.
Yeah, so that's called a 1031 exchange. So essentially, you can essentially like sell a house and buy another one right away and do it
Mm-hmm.
that way. And I know that there's other things too that if you sell a house within, if you sell a house and you've lived there for 2 out of the last 5 years, you can also sell that with no capital gains tax, or there's like a certain limit. So no capital gains tax, I believe, up to 2 or 300,000. So there's a lot of definitely a lot of benefits that you can have, in real estate, and they make it, really, really powerful, and give you a lot of tax incentives within the United States to own real estate. So I think one thing that we're kind of seeing right now, though, is that it is becoming very inflated in the United States, and I'm sure it's becoming inflated everywhere globally, just because inflation's hitting everywhere pretty hard. Um, and so, yeah, I mean, what we're seeing in the United States, I think, and maybe globally too. I don't know if this is necessarily your experience, but I know a lot of my friends who were saving for a house, maybe didn't pull the trigger or buy one during COVID, just because they thought, the inflation's going to slow down or something along those lines. And it hasn't really. Feel like they almost like missed the opportunity and are just kind of sitting and waiting for a housing crash. And so now it's unfortunate. I don't know when that's going to happen, or if that's going to happen anytime soon. I mean, it seems like a lot of signs are pointing to, maybe a potential recession or economic downturn, however you want to look at it. But I know, like, inflation and everything else is affecting, a lot of people outside of the investing world. Whereas, like, maybe you and I benefited a little bit when we're seeing, the all time highs, or even when you're looking at value stocks. It seems like it isn't hard to really miss at that point. But now, we're getting kind of into maybe a bear market is what you want to call it. I don't know. We're seeing a lot of downturns with big name stocks across the board and a lot of companies. So how do you kind of I guess view the current market conditions as far as that goes? I know we kind of got into your strategy earlier, but how are you, I guess, just viewing like the overall environment? Are you I guess worried when you see some of these stocks keep going down, or do you kind of I guess maybe dollar cost average into it when you see like a downturn kind of go into there, or do you just do maybe like a lump sum buy, and then if it goes down, it goes down a bit, but you believe in the underlying business, so you just hold on?
Yeah, first of all, it of course depends a bit on when you have the cash, right? So yeah, most of the time I'll put a significant amount in, so I'm more of a lump sum guy, I guess, in that case. But yeah, if I expected it, no, you never expect it. First of all, you can never expect it. But as I said before, I thought like a lot of stocks were actually uh, pretty much overvalued, and I still think after this 20% correction from S&P, like year to date, I think it's still the case that a lot of stocks, even tech stocks, that dropped a little, or dropped significant amounts, that they are still in some cases overvalued. So I mean, are you prepared? I guess that's the question. No, I think you never are. You are never like fully prepared of what's happening, because for example, if you said last year to me when Alibaba was $180 that it could go lower, nobody was saying it can go lower, and we're looking at an $80 stock right now. So you expect the unexpected, I must say, right? So yeah, am I prepared now? You're never prepared, but I just buy whenever I think it's a right price, and whenever it drops, like they say here, let the dust settle, never catch a falling knife. But you also don't know when the dust settles. It's really hard to actually time that market. And I think just with the way of analyzing companies I do now with a conservative approach, I think chances are high I do well in the long term, but still that's the long term. I'm really talking here about like 10 plus years. I'm not like even a one year investor or like 6 months. No, that's definitely not for me. And also very important to actually put money in you can afford to lose. And that makes it, I think, the um, most important thing, and also to actually go to sleep well at night. Because if you're thinking about how the market will open tomorrow, I think you're investing too much money, or money you cannot afford to lose.
Yeah, I agree 100%. And so now too, I mean, we see a lot, like you said at the beginning, you see a lot of, maybe social influencers, YouTube videos, other things, people putting out content related to stock investing or investing as a whole. And granted, you said maybe it helped you get in and get started, but how are you filtering through that information and all these people coming out that you're like, okay, this is information that I trust? Or do you do like some sort of back end research after you hear something in order to kind of I guess affirm what or go against what some of these quote unquote gurus are saying?
Yeah. So most of the time, everything I hear on the internet or social media, actually, I don't use social media personally at all. I mean, I actually don't have an Instagram or a Facebook. I only have LinkedIn. But, but yeah, and okay, I do use WhatsApp, but not. But I'm not scrolling like endlessly to just see content. I actually stopped with it like 2.5 years, 3 years ago, actually already. Um, but yeah, the back to the question, of course, is yeah, I actually put a question mark at every statement what I hear about the stock on the internet. And of course, when there is a direct source or so, and I check it out and I see, okay, that what the guy was saying is actually true. But I think it's very important to actually separate this the facts from opinions in the case when you're actually doing some analysis, so you actually can form that opinion yourself. So when I, for example, are you saying about buy Amazon now because it's 40% down off to date, I'm first checking, okay, that could be a nice entry point, but I'm probably going to my platform first, do some research, understand the business, uh, to analyze the management, compute the DCF, and then check, hey, maybe this is a nice entry point for me, and because I do have some, not so benchmarks, but I do have some um, characteristics I want to look at for a certain stock, and these are just subjective. I always try to be conservative, and in that case, then make the decision. So yeah, put a question mark on and like everything you see, dive into it, and yeah, sometimes you're too late, but you're never too late. Uh, when for example when we lose when you're going to lose some things because you actually made an assumption that's not true. So yeah, just I think that's my advice on that case. Just always try to do your own due diligence.
Yeah, I think one thing that I'm going to take away from what you were saying there too is that always question and kind of do your own research to get your own thesis on a company, and that's the kind of things that I like to do as well. Is like maybe some people it'll take buying one stock or something very small, where they're like, okay, now I own it. Now I need to know and understand the business. And it's an idea I heard. But I think, like you said, it's good to do your own due diligence. And I think having that thesis kind of helps at the end of the day determine, if it takes a big downturn, does your thesis change? Or is this a time to sell? Or do you truly believe in the company and the underlying business, and then that'll make it easier for you to kind of hold and deal with maybe some of this unprecedented volatility that we're seeing these days. And so along the lines of volatility, where I feel like we're kind of seeing more so volatility now than maybe ever before. I think it kind of has to deal with a lot of this economic stimulus that we had, a lot of the money printing and QE that the Federal Reserve went through now, and yeah, I mean, at the end of the day, these value companies maybe are a little bit more level-headed or grounded initially. At least that's the perception from the outside looking in. So, for as far as like volatility goes, do you see it as like a benefit, or do you kind of, I guess, look to avoid these super volatile companies?
Well, I'm definitely not avoiding the market because of the volatility. Because I rather have a rough 15%, than a steady 7%. So yeah, if you understand what I mean with that, it's actually like, yeah, I just look at the end result, of course. And I think actually the great volatility actually provides you with a lot of opportunities. They can provide you with a lot of opportunities, and of course you have to search well and look at that. But yeah, mainly if like you have this, you have seen, for example, I think it was today about that Snap earnings announcement that they actually took down the guidance. Not sure if it was today, but I mean, you see all tech stocks going down just based on like that outlook, and I mean, you can question yourself like, oh, is the business of Google changing right now? Is there fundamentally something wrong? Is this temporarily, etc.? But it goes down anyway, because of certain rumors or like whatever. Yeah, so I guess I think the volatility can actually really provide you with great opportunities, especially for people stepping in with the long term vision, and of course also for day traders, right? Because they really like volatility a lot.
Yeah, I gotcha. So we'll give a couple more questions before we wrap it up here. But say you have a friend or somebody that's new, completely away from investing, and wants to come in right now and get into investing. What would be the first thing that you send them to, as far as like an educational resource or something along those lines, to kind of get them, I guess, first in the right mindset before they start doing it?
For the right mindset, I was saying you should go to my website, but no, that's that's a bit mean. No, I would suggest to actually uh, try out some things on like a small level, just to look at what works for you. It might be some very cliche type of thing, but um, check out what actually works for you. I mean, I started doing, as I said, candlestick trading, day trading. I looked at some options in the beginning and all these risky stuff, and actually found value investing to be something I can uh, actually. I have a what's the English word for it? Um, have a foundation. Have a foundation when it comes to yeah, to investing. So I would actually suggest look up a lot of things. If you think value investing is something for you, try to check out Sven Carlin. He has a great value investing book also, but maybe try also something more more easier. Just found a really easy book about value investing, and see how this volatility, or how you can miss the market to actually time your entry point in the market. Because I think still, if you, for example, just go straight to index in fund investing, and we have always the perception that index funds always go up. I mean, in sometimes they actually don't go up, because we have had 20 years. For example, if you look at an index fund in the Netherlands here, it's also not maybe the best example because it's just not a great fund, but it's still not even at the highs it was in 2000 and the dot-com bubble, for example. So that's one very important thing. Index funds don't always go up, especially not inflation adjusted. Your real returns can be zero or even less for like 15 or 20 years. So that's something you really have to keep in mind. Don't just blindly put your money also in the index fund. Do some research about it, and yeah, try to really understand what's behind a stock chart and a stock price. I think that's what I must that's my advice.
Yeah, I gotcha.
Yeah.
Yeah, and I think at the end of the day, too, everybody's a value investor at heart. Whether you categorize yourself as a growth investor, value investor, or whatever, everybody's looking for a company that is what they deem as undervalued, right? They buy a company or a stock or whatever with the perception or with the thought that, hey, the stock's going to be more valuable down the line, and that's kind of value investing at its core. Looking at maybe some more financial metrics or the things like that to see if it's
Mhm.
undervalued based on just hard evidence, which is their
Mhm.
financials. Now, for somebody who maybe not as math oriented or not as into the numbers, how do you kind of I guess sway them or tell them like, hey, take a dig into the financials or use like a tool like you guys created in order to see where the stock is as far as like value goes? Like, how do you kind of convince them to just take a little bit extra time, and instead of going straight off the fundamentals and just the overall business, but just kind of looking more at the financials and other things like that?
You mean to guide them to do that?
Yeah. How do you kind of convince somebody to, yeah, like essentially guide them, be like, hey, learn what a PE ratio is or something along those lines
Mhm.
to see if, if you're buying a company, even if you like it, you could be buying it at a value that's extremely overvalued, and
Mhm.
you could be buying at a peak or something along those lines. How do you kind of, I guess, lead them to more of that kind of analysis?
Yeah, it in essence it's actually like pretty hard because it begins with changing your mindset, because I think that's the most important thing. You what I actually do when I speak to people about this, or like I guide them through, is to actually, as I said at the beginning, think of, um, when you buy a stock, think of buying it like you're buying the whole business as a business owner. And that's something I think it's a bit weird in the beginning to actually heard like phrase it like that, but I think that's the core of it. If you buy a business, you want to know what does it produce, what does it make, what does it seem, because nobody wants to buy a business here, look at it and just throw some money at it and don't know what you're getting. And that's what actually happening a lot. People just look at a stock chart, they see it's down or it's up, so I buy, and they actually don't know what they're buying. And so when people go to a house, for example, or buy a house in real estate, they want to check everything. They want to get a plumber to check the pipes, etc. They want to check the foundation of the house. They want to look at the location. They want to look at everything. So sometimes I actually say, okay, just think about it like this. Think about it like you're buy a stock like you buy a house. This is not something that you just look at one chart or one picture and now you want. As, sadly, in this time, it's a bit different. You cannot actually always do a whole tour through a house before maybe it's already sold by then. But yeah, buy a stock like you buy a house. I think that's one thing I actually intrigue them to really dig into these fundamentals and financials, and know what you're buying in that case. So when it goes down, for example, in this market, maybe we will get a housing crash here in the Netherlands or a housing boom or whatever. we are in a boom right now. So when the housing crash, you're also not planning selling your own house. You're okay. You're living in it, but it will be crazy to actually someone goes to your door and the next day and your house is worth 50,000 euros less, and you're not selling it. But why do people sell it when the stock is down? Because they actually don't know what they're buying into, and that's the most important thing when I always try to explain things. Know what you're buying into.
Yeah, for sure. And I think that's a good place to leave it off of is know what you're buying into, know the underlying business, and know everything that you're buying. And like you said, so then your thesis at the end of the day, no matter what the swings are, if you know the business that you're buying into and the you believe in it and everything like that, you can kind of stomach some of these volatilities and maybe some other factors that you can't necessarily control, whether it's a giant economic downturn or something along those lines. All right. So, Steve, thank you so much for your time. Why don't you tell everybody about financial stock data and I guess where they can find you at?
Yeah. Well, first of all, yeah, thank you for the invite, of course, Brandon. Really enjoyed the podcast, and I hope I spread some wise words that you can actually do something with yourself. And I'm not saying you should do it because I say it. No, just think about it, and yeah, and try to do something with it. So that in the first place, thank you. So yeah, I would encourage you to check out the platform on financialstockdata.com. It might sound or looks a bit overwhelming in the first place because there's a lot of data. We have a lot of information icons everywhere, so you can check out, and it will explain the ratio you're seeing there. We are pretty active now on Reddit. We posted there also on financial stock data r/financialstockdata.com. Sorry, without the .com, but yeah, yeah, and you can also follow us on LinkedIn, financialstockdata.com. These are the most kind of active places where we are. We do also have an Instagram. We are a bit more or less active on that, but we mainly focus now on Reddit. So and if you sign up with the code GCI, you actually get the 30 days free trial on the premium plan. And I think serious investors will really like that plan. And another thing is we actually have a new a page coming up, and that's a page with all sort of indicators. So more of that kind to actually know when something might be a good buy, or not necessarily a buy, but it might be a good indicator to actually make a nice investment. We have some nice features coming up in a few weeks. So we're currently developing that, checking it out, and yeah, I hope to provide even more value. And of course, we have a free version too. So always, yeah, just check it out and try to sign up for that. Thank you.
Yeah, for sure. So yeah, I think you did say that there's a lot of data on there, but I think at the end of the day, data is power, and knowledge is power. So the more data you have, the better, and you can use it as you will, and kind of filter through some of that data to help you make your own decisions. Maybe you take more weight in some metrics than others. But I always think, that they give you a lot of metrics to kind of help you make that decision, or not help you make the decision, but help you make that decision on your own, allow you to kind of analyze it deep. So it's been a very valuable tool for me, and I continue to use it, and it's great. So yeah, like you said, use promo code GCI, and you can get that first month free. And if you sign up for the free account, also just enter in the promo code or let them know that I sent you. So with that, Steve, thank you so much for your time, and we'll shut it off right here.
Thank you very much, Brandon. You too. Hope to speak to you soon.